Hey, this is Brad Gill at NextHome Lifestyles, and welcome to a brand new video series we're going to do called Your Next Investment in Housing. In this series, we're going to actually be interviewing other rockstar real estate agents across the United States and even outside the United States to interview them and find out exactly what's happening within their marketplace and what incredible opportunities they have for investing in housing. In this first episode, we're going to be interviewing an incredible local agent within Nashville, Tennessee, who's going to talk to us about two incredible opportunities. We got the highlights right here. Number one, we're going to be sharing information on short-term rental investments starting at $600,000 that are providing 10 to 15% cap rates, which is pretty incredible, especially since here locally in the Bay Area, we're lucky to find something that's given us 3% rate of return. And next, we're going to be talking about the holy grail of tax benefits, and that's called qualified opportunity zone developments. In a qualified opportunity zone development, if an investor rolls their gain into one of these developments and holds it for 5 years, they can defer the capital gain up to those 5 years and even reduce it by as much as 10%. But if you hold it for 10 years, that's where the magic happens. That's when the entire capital gain can be eliminated if you qualify. So, I'd like to invite you to sit back, relax, and enjoy, and watch this incredible interview with Will Johnson of the Will Johnson Group in Nashville, Tennessee, as he interviews one of his builders and tells us all about short-term rental investments and these qualified opportunity zone developments. And of course, if you want more information on these opportunities, feel free to contact me. I'd love to get you connected to Will and get you some more information. All right, guys, enjoy, and I'll see you on the next one. I am super excited to be here with Will Johnson of the Will Johnson Group at eXp Realty, based out of Nashville, Tennessee, along with Rick Wells from Rise Development and Stay Allure. We have two experts here from the Nashville, Tennessee area who are going to educate us and tell us a little bit about the opportunities that are going on in the short-term rental investment market. Will, I hear it's bonkers over there. Why don't you kind of give me an idea as far as what's currently happening and why are people going to Nashville these days?
Yeah, so I work with multiple different investors literally from all over the country, and their interest is not really in buying any flip properties or renovated properties or even long-term properties. Really what they're interested in, almost all the investment dollars are going into, is the short-term rental market here in Nashville. And I think when you look at investment-wise, especially on rentals, I mean, there's two main things that people look at. They look at, what's our cash flow going to be? And when we go to sell, as far as an exit strategy, what can we look at as far as appreciation goes? Especially in Nashville, when you look at some of the opportunity zones, we have really a unique third value proposition, which is the tax benefits that go into these short-term rentals when they do decide to exit or to sell. So literally from New York to multiple areas of Florida to Washington State, California, Oregon, Minnesota, Texas. I mean, I've got investors with substantial sums of money. Most of them are 10 million plus that are the thing is trying to find the projects here in Nashville and people that are willing to sell, because most of the people, and I think Rick, who's without question, I think builds the highest quality product that I've seen or of any of the developers that I work with here in Nashville. But a lot of them are holding, they're building them and they're holding them because they realize the appreciation, the cash flow, the tax benefits we were talking about, and where else are they going to put that money to be able to get that type of return?
Absolutely. So can you tell me a little bit as far as what's the draw to Nashville? And again, as a local there, what have you seen over the past couple of years or the past few years? How has this opportunity developed, in other words?
Rick, do you want to take this one?
I mean, I can speak from just kind of my personal experience. I'm a residential real estate developer in the townhome space. Prior to getting active here in the Nashville market. I was very active in the Denver, Colorado market, which is also a market that's been hot for the last really 8 to 10 years. The difference is in the Denver market, I built a lot of inventory on spec with the intent to sell as an exit strategy. Here in Nashville, I initially came into this market with a similar idea that, I had heard good things. I was doing just a handful of flips with a friend of mine that was over in Memphis that I grew up with. And while I live in Arizona, it's not very convenient to travel from Arizona to Memphis. And we were just doing flips and we were making some money, but not a lot of money. So I shared with him, I had started to hear good things about Nashville. It's a little bigger city, a city that's a little more fun. So I said, if we want to explore it and go over there, I will. And if you want to move over and be kind of the boots on the ground, then let's do it. So we came here with the intent to build some spec inventory, which we did, and eventually sold off. And while I was here, we visited Broadway Street a few times. And the common thing that I saw, there were large groups of people. A lot of them are bachelorette groups that come to Nashville to experience Broadway Street and the music scene here. That has exploded. I travel a lot for work, and over the last 3 years, whether it was in Phoenix or Denver, very often I would hear people say, well, we have trips planned to Nashville. And there has been a buzz around Nashville and the music scene here, and particularly Broadway Street, over the last 3 to 5 years. I think it always existed, but it's on steroids at this point. A lot of the country music stars, are putting their names on the bars down there. Dierks Bentley, you have Jason Aldean, you have Kid Rocks, Blake Shelton. I mean, there's a number of them, and there's more and more coming each day. I think there's 3 more planned in the near future. But anyway, Nashville has always been here, and the music scene's always been here, but again, it's just exploded lately, and wherever I travel, people are suggesting they're coming here. So I mentioned earlier, I'm in the townhome space. So I really enjoy building multifamily, density building, designing a 50 by 150 lot that had a single unit house on it that I scrape and can build 4 townhomes going vertical. They're all tri-level product and typically are in the urban core because that's where I like to play. And you typically will have rooftop decks with views of downtown and just, call it millennial generation or younger generation that, can enjoy that type of product. I've always been, when I first started in real estate in Arizona, I went through kind of what I call the evolution. You start out cosmetic remodels, that, expands into fuller scope remodels. Eventually you're reconfiguring the layout enough that you might as well just scrape and build new. In Arizona, I started doing that. And when I started scraping and building new, I was in the luxury spec homes. So I was building, on average $2 million homes, and I enjoyed it because, the finishes you put into a $2 million home are greater than a $400,000 spec home. So I carried that through to Denver, Colorado, where I really got introduced to multifamily building and did, I think, somewhere in the neighborhood of 175 units over a few years. The Denver market is not what I'm building here in Nashville, but I carried that for the higher end finishes into my product. Now I'm the construction group, so I get a, build at my cost here in Nashville. And so it affords me to be able to put in higher end finishes. That to me is the area I like to focus on because while, Nashville has a few STRs, my product I think stands out above all others, definitely a top tier product, and it's priced that way. And what benefits from that is, it's a little higher price. So you have people that are willing to pay that higher price. Typically they're willing to take care of your inventory a little better than, say, if it's priced $300, per night versus $1,300 per night. The people that, can pay $300, sometimes they come in and trash it and really don't give too much concern for the product itself. So I've always been a firm believer, if the market is going to correct itself, which, real estate is cyclical and there will be market corrections throughout the life of it. I always want to be positioned well if I need to, or if I'm forced to sell my inventory. So I've always taken the stance, a product, a location, because then if the market corrects itself and I'm put in a position where I have to sell, my inventory will move before, the rest of the inventory. So I've carried that through to what I'm building here in Nashville. Plus, I get intrinsic value out of what I'm building. I just tend to like to build, higher quality stuff. And I've done that here in Nashville.
Absolutely makes sense.
But
the properties are definitely beautiful.
Thank you. I kind of got off track there, but basically getting back to your question is, while I was down on Broadway Street, I saw a need for larger groups, mostly bachelorette groups that were coming in and enjoying Broadway Street. So I saw a trend leaning away from hotel rooms to Airbnbs. Obviously, you have the convenience of a home, especially for these larger groups that are coming in, rather than have to have 3 separate hotel rooms where if you're socializing with your group, you have to sit at the end of a, queen size bed. I'm offering them a complete 2,000 square foot house or townhome, 3 levels, sleeps 10 comfortably with a rooftop, a kitchen, full kitchen, and a full living room where they can socialize, have drinks before they go down onto Broadway, and then come home and pass out in comfortable beds. I really saw the opportunity that, there was a trend away from hotels into Airbnbs, as well as a need for how to house larger groups, which is common here in Nashville.
I think what's helped push this trend as well, that maybe not as many people talk about, is the aggressiveness in hotel prices that have taken place over the last 3 to 4 years. When you look at the average cost of a hotel night in Nashville now versus, say, 4 years ago, I don't know if you would agree with this or not, Rick, but the prices have just gone through the roof, where even, I think, as much as the social aspect of it, economics, when you're looking at housing 8 people or 10 people in, a short-term rental. I mean, you get the social aspect of it, and you get the rooftop deck and the full kitchen and all of that, but many times at much less the cost of what it would be for getting 4 bedrooms in a hotel.
Yeah, absolutely.
Yeah, I mean that makes perfect sense to me. Speaking of someone who's visited there and definitely been blown away by the nightlife and the draw that you get to Broadway, and it's definitely something all the way out here in Silicon Valley where a lot of people make plans to go out and visit Nashville. Whether it's a bachelorette party or a bachelor party, or just to go out there and go experience the local music and the nightlife and the culture and the cuisine. Definitely something that's become very popular. And with obviously travel coming back online and the need to get away, I think that Airbnb has definitely been a better choice than just staying at random hotels. Plus, I think there's a staffing issue at hotels too. This kind of been going on due to the pandemic. Whereas with Airbnb, you have a little more flexibility, and you can control the environment better when you're traveling.
I mean, I would agree with that.
Absolutely.
And some of the investors that I've talked to, I think their concerns is sometimes the volatility of laws and things that take place in Nashville. You can't ever predict what's going to be voted on or that's going to come, in place in the future. But I know that Rick's been to many of these meetings. Mark, who is a partner of his, I've been to multiple of the meetings taking place in Nashville as they're voting on a multitude of different things. And I think a lot of that volatility, at least in my opinion, for what it's worth, is behind us, especially with what was taking place with the RM20 zone land, what was taking place with proximity to churches and schools, and those laws which took place within the last year and a half, I think did cause some concern and there was a lot of unknowns that were taking place during that time. But now having that behind us, I feel like there's much more certainty and really a solid path as far as a short-term rental goes in the future versus what we've seen in the past.
So let's stop real quick. So you're kind of jumping into, if there's an investor looking at this from a risk perspective, because especially out here in California, we've had Airbnb and short-term rentals going on for quite a while. And a lot of the local communities are up in arms about having too many Airbnbs. There's a lot of areas, San Diego, for instance, as one particular city that's really, the residents really fighting against everyone trying to buy a house and convert it into a short-term rental. So, and the same with Las Vegas, a lot of areas in Vegas where they're losing the ability to do Airbnb because local residents are up in arms against it. So from an investment perspective, the opportunity that an investor has to purchase one of these properties is great in the fact that the cash flow can be pretty amazing, right?
Yeah.
Before we jump into, again, the protections on short-term rentals, specifically in Nashville, let's talk about some of the opportunity that's actually going on. We have this beautiful property here that we're looking at on Allure. This one is the Jason Aldean suite or the Aldean Avenue. If an investor was coming in to buy one of these units, what type of investment are they looking at purchase price wise, and what type of cash flow can they expect from this?
Right now, if you have a product, a location, the one you just mentioned is, and all of mine are, when I was purchasing my dirt, it was a funny story because agents would bring me, potential deals, left and right. And they would get sick of me hearing, if it's not within a $5 Uber ride, circumference of downtown, I'm not interested. And they would still bring it to me, and I'd say it's outside the $5 Uber ride.
I was one of those people,
my inventory,
and he's correct.
And I stayed true to, I will only buy within a $5 Uber ride of downtown. A product, a location for a short-term rental permit. Right now, 3 or 4 bedroom, your purchase price, retail price, is right at about $800,000. It's creeping up to $800,000 because 1231 was a big milestone in the STR world here in Nashville, and I'll speak to that in just a second. But that A product, A location retails for $800,000 on average. You can expect about $9,000 to $10,000 a month in gross rents.
So $9,000 to $10,000 a month in gross rent and a cash outlay of around $800,000. Why don't we talk real fast about the property management fees? I'm assuming that part of the reason why there's a protection in Nashville for these is because there's some taxes that are probably paid out of the short-term rental income. What other costs as far as property management are concerned on that monthly basis?
What's typical in the market is you have obviously the channel fees. So Airbnb being the most popular, we've been calling them Airbnbs, but they're really only one marketing channel that just happens to be the most popular. VRBO is another one. Stay Away or Home Away or whatever it is another one. Expedia is one. So you have multiple channels in which you can market your property for potential guests. Airbnb being the most popular is 3% to Airbnb from the gross sales, and it comes off the top. And then what's typical for property management companies is, 18 to really 24%. Now, I saw again another opportunity, which is how Allure was created, because my overhead expenses for Allure are probably closer to 10 to 12%. There's an opportunity for some savings over the typical market. Also, much like my inventory, I like the control of the guest experience. And so we are very much aware of, response rates. So Stay Allure is a super host, and it received that within 2 months, which is pretty abnormal for property management companies. We have 5-star reviews on all of our properties, and that's primarily due to my property manager, Lex. She's got quite the personality, and she pretty much makes friends with every guest that stays in our properties. So
Got it. So you kind of offer a all-in-one opportunity where you're building these out, and we know you're building to quality. In the event there's any change in the market, your quality is still going to be there, plus longevity for the product, because again, it's going to attract a different traveler wanting to stay there. But you're rolling that all in together. So just to understand kind of what the current opportunity is in general, though, would it be fair to assume that someone should plan 20 to 25% of the gross rents to be put towards a property management company covering Airbnb fees and everything else?
Yeah. And obviously, if this is somebody, there's a lot of talk about the opportunities that exist within my portfolio. I'm looking for capital partners to maybe joint venture on some of the units I have, in which case, I would offer a discount in the property management side because I own a property management company. So there's, some opportunities there as well and some savings on the cost. But I would say, generally speaking, 18 to 22, 23% is what they would expect.
So if we ran with a 25% expense off the top, and we kind of went back to those numbers because I wanted to calculate the cap rate real fast. We're talking about an $800,000 acquisition cost. You're looking at about $120,000 in gross rental income per year. If we take 25% off for expenses, that's still left with $90,000. So, I mean, in reality, $90,000 a year is still going to calculate out above a 10% cap rate. And here in Silicon Valley, we're lucky if we find 2%. That would be amazing. Oh my God, you got a 2% cap rate. How'd you do it?
And that's why, I'm so bullish on, one, Nashville and short-term rentals as an asset class.
Not only the cap rate, but the appreciation that's taken place in some of these. Like I've had some investors that have reached out to me, that have bought some short-term rentals and some units that they bought even just 12 months ago for around the $600,000 price point could probably sell between $775 to $800, now just 12 months later. I mean, the cash flow is fantastic, but we talked some about the appreciation just now, but also depending on when you get into some of these projects, them being built in the opportunity zones really makes it a rare find for investors, the tax benefits that come with that.
Let's bring up the tax benefits, but just in a minute, I wanted to go back through a couple of the questions I had for you. I was looking at the article that you sent over to me earlier today showing the best cities for Airbnb investment, and United States at large, Nashville is ranking in at number 4. Right behind Hawaii. In fact, all the top 3 are Hawaii, and I can understand why. So it's amazing. It's amazing that it's ranking number 4. I mean, it looks like there are over 6,000 short-term rental listings within the Nashville market. So it is a very big market. But you guys, obviously, Rick, this might be suited to you. There's obviously still a ton of potential for increased development and opportunity to create more of these rental units. So we're not anywhere near saturation at all.
Well, actually we are, because I had mentioned earlier in the conversation about 1231, and Will touched on it briefly earlier in his conversation, but obviously there's many zones in Nashville, but like a lot of the cities across the U.S., Nashville's no different in that residents living in residential neighborhoods are not excited about having a short-term rental, a group of 10 girls coming home from Broadway at 2:00 in the morning and being loud and, overserved. So trying to do away with it. Nashville has aggressively, within the last 4 or 5 years, in those residential neighborhoods, started with just a single family zoning, which is our 5, 6, 7, or 8 in our series here in Nashville, and they did away with those for non-owner occupied STRs. If you're an owner occupied and you live in it and it's your primary residence and you go away for a weekend, you can get a permit and lease it out. But they're trying to do away with non-owner occupied business in the short-term rental within residential neighborhoods.
And then you guys are creating the opportunity, or the opportunity exists through what Will was going into when it comes to the redevelopment or the tax benefits?
Not quite. So different topic. We'll get to that next. But then in the next zoning, which is a multifamily zone, 3 years ago when I said I was buying up dirt in this RM20 zone, which is a multifamily zone, because I build townhomes, I'm in the townhome space, I bought all of that. And about halfway through getting permits and going through the development process, Metro Council came out with a bill, one of the council members came out with a bill to do away with short-term rentals in RM20 zones. Oh shit, right? I just bought all this dirt in that zone with the intent that I wanted to build and hold and operate short-term rentals.
Absolutely.
Because of the opportunity. It took lobbying efforts on our part, and we've spent probably better part of 6 to 9 months lobbying for what was approved and decided on. So in that RM20 zone, which is a lot of the inventory in the outskirts of downtown, within that $5 Uber ride of downtown, they proposed the bill and it passed that, and we lobbied, and I call it a strategic loss. But basically, as of January 1 of 2022, so just 6 weeks ago or whatever it was, they are no longer issuing permits in RM20 zones. You had to finish, so this was back in 2019 or 20, very early in 20 when it was decided. Because us developers put in money and lobbied for it, they allowed us a time period in which to develop whatever we were going to develop and submit for our applications on STRs. And if we built it and applied for the STR permits, we would be grandfathered in. As long as you play by the rules, you won't lose your permits and you're grandfathered in. So it's a strategic loss because they just capped how many STRs are pretty much in the residential neighborhoods of the outskirts of downtown Nashville.
So what he's saying is there won't be any more built in those residential areas. So a lot of the problems that you were talking about earlier in San Diego, where, you're getting kind of uproars or kickback from the residents there, we're beyond that. We've kind of passed that at that 12/31 date that Rick was talking about, to where now anything new that's going to be constructed that's going to get a short-term rental permit is going to have to be constructed in more of a commercial area, commercially zoned real estate.
Got it. So from what you're saying, to summarize what you're saying, Nashville's already gone through the process of determining or limiting short-term rentals, making the neighborhood residential areas, bringing it back for the residents, but really trying to focus the efforts on creating certain areas for these short-term rentals to be in. So from a risk perspective, losing a permit for a short-term rental, the city's really working hard with these short-term rentals because it looks like they're very supportive of them. Is that fair to assume?
Yes, because obviously, tourism is a big draw here. And, they obviously realize they have to house those people. And so, again, it's a strategic loss in that the offerings of new permits is capped. So they're controlling the supply. But the inventory we're on this call for discussing is grandfathered in.
Okay, so then let's jump into that, right? We have a situation where, again, short-term rentals are pretty much saturated in the marketplace, but you guys have the ability there are still units available for purchase. There's turnover in the marketplace, number one, but I take it probably not very often, right, Will? I mean, how often do these short-term rentals get turned over?
I mean, there are days where I'm looking, and no exaggeration, you may find 2 available in the entire city of Nashville. I mean, people aren't selling them. They're holding on to them. And so for them a lot of them that are sold, like I sold multiple units last year, most of them never hit the market. It was just relationships that I had with people, that were looking for them. And I would reach out to different developers to see what they would have or what inventory that they had coming. And a lot of times we would work out deals sometimes before the developer even broke ground on them.
So having that relationship with Rick that's what you have to have. Rick is there creating the inventory and providing the opportunities for the short-term rentals, where really in reality there's not too much inventory available. And not only that, but just like you were saying, you've already got the permits for the short-term rentals grandfathered in due to these changes in zoning.
Quite literally, you may go online today and take a look at the Nashville MLS, and there may not be any short-term rentals to buy for any price. I mean, the inventory is incredibly low for the average consumer to be able to purchase them. I feel like if you don't have a relationship with multiple, developers or a developer that does a higher volume, good luck in helping your clients or people from out of state, trying to find one to buy. So, but there's only limited commercial space that's even available, to develop that's within that $5 Uber ride that Rick was talking about, which I think is critical. And, Rick has gone through and bought up, multiple spaces that are on that commercially zoned land. So even some of the newer projects that he's got, we don't have to worry about them being grandfathered in because they are on the commercially zoned properties. Rick and I may have a conversation, and some of these projects may be 15 to 18 months out, and he's telling me about them. And sometimes he'll allow partners to come in, and sometimes he's like, thanks, Will, I appreciate the interest, but, I'm going to hold on to these myself, which
the opportunity is too good, right, Rick?
Yeah, exactly. So,
exactly. And Will spot on. I mean, I have agents that come to me daily just because I'm pretty active in this market. And I have been for 3+ years in the short-term rental space, within the urban core of Nashville. So, I mean, I have agents coming and saying, hey, I have a list of interested parties if you ever want to unload any. So it wouldn't be difficult for me to just sell units individually if that's really what I wanted to do, but that's not what I'm looking for. Remember, a commercial zoning doesn't allow for residential building on it. You have to get a special exception approved through what they call a BZA, which is just a committee that oversees like rezones and stuff like that. To put residential on commercial that isn't like a hotel, you have to get a special exception. And nowadays, those special exceptions, they're likely not going to allow short-term rental permits. They've created a new notation within the zoning that says NS, which is no short-term rentals. And so if you ever try and go before Metro Council on a commercially zoned piece of property and say, can I get a special exception to have residential units on it? Then they're going to say, well, you got to plead your case. And if they agree to do it, 9 times out of 10, you're going to get that NS designation within that zoning, and you won't be able to get an STR permit.
Okay. We've got a process where you really have to be involved and know exactly what you're doing locally in order to be successful at it. So basically, we've got limited inventory availability, increasing demand for travel within the area, increasing pressure for all cost of room and board going up. Hotels are increasing rates, Airbnb, everything. In fact, I was reading a report by Airbnb saying that, they don't even expect Airbnb to fully recover to where they were pre-pandemic until the end of next year. That's the end of 2023. Right now, prices are still, I think they said 25 to 30% less than what was being charged on average in 2019. So the growth potential here, income-wise, appreciation will, that you already said, for these properties of what, 20% plus, it looks like, almost annually, just based on limited availability?
I mean, some of these units, I would say in a year's time have gone up close to 30%. I mean, even faster than regular properties that we're seeing in Nashville, just because there's not really many areas left to build these. And so the people that already hold them, that are willing to sell them, I mean, they're like gold.
Yeah. And I mean, that makes sense, right? Because again, if you're buying these units, you can get a 10 to 11% cap rate on them. And then you get out of area investors from my area. They're looking at it going, hey, 10 to 12% double digit cap rate is way better than, our 2 to 3% we're used to. We don't mind if it drops to 8%. I'm okay paying even a higher price for it.
That's if you're paying retail.
Yep.
So if you're able to come in the development phase, then your basis is going to not be, retail.
Yep.
So those rates get even much better when you're part of the development side of it.
And okay, since we're focused on that, and I don't want to forget about those tax benefits, because I think that's an important topic to cover as well. But because you brought up the projects you currently have, how many potential projects, Rick, do you have going right now? And what are the build out dates expected?
I have 45 total units in various phases of construction here in Nashville. Of those 45, all except for 28 of them were in the RM20 zone, and I had to build them out and get my STR permits prior to the January 1st of 2022, 12/31. I fell a little short, primarily because of COVID. Construction here in Nashville is crazy because it's a booming city outside of just tourism and the music scene. I mean, I can name 5 billion-dollar developments going on in downtown Nashville. And so while, the draw for us is obviously out-of-state tourists coming in for the music scene, I mean, downtown Nashville is booming. Nashville as a city is booming. And so it's exciting to be around it. I always gauge economic development by the number of cranes in the sky. And when I was in the Denver market, I think I hit maybe 14, 15, and I've counted 30 in the Nashville skyline at its peak, and they're probably still, I haven't counted in a while, but there's probably still 20, 21, 22. Currently, you got huge development going on in an area called River North, which is in golf terms, a driver away from some of my inventory. That's where Oracle announced that they're moving in. They bought 65 acres in River North, and they're going to build a business park there. Southern anchor of River North, I think it's 122 acres in total. It was a group out of Chicago that owned it, and I think they just sold the last piece off. So it's a master plan, mixed use development that's enormous. And Oracle will be in there. It's called River North. I can send you marketing material on it. But
you're looking at several $1 billion going into that area.
Absolutely. It's the hottest area. They're naming it the East Bank because it's on the East Bank. So the Cumberland River runs through the edge of downtown. Obviously, on the eastern side of the river is where Nissan Stadium is, the football stadium. And then River North, the southern anchor is Topgolf. And then there's just huge development planned all along the river there.
Oh,
and
wow.
Oracle will be probably the biggest landholder.
Will, can you see my screen?
I can, yep.
Is this it?
Yep. That's what he's talking about. Yep.
Wow. All right. I'm just blown away by this. Okay. So the development, with that being said, it's to me, from my outside perspective, I mean, Nashville's kind of in very early stages of economic development then.
Yeah, the yards development, which is, Amazon announced, I don't know how long ago now, probably 2 years ago, that when they were doing their second headquarters, Nashville got a small piece of that pie, and an operational hub was decided here. They built, or they committed to 2 towers in the yards development. The Grand Hyatt is on the southern anchor. Amazon's 2 towers are on the northern part of that development. And due to COVID, they kind of paused it, but they recently redesigned and reconfigured what they're going to put in the center between the 3 towers. And it's massive. There's like 30 buildings in it. It's insane.
Wow. Yeah, I mean that.
So if you Google the yards development in Nashville, you'll see it. It's impressive. That and River North are the two biggest. But then you have the major high-end hotel chains coming in. They're finishing the Four Seasons. They just finished the W in the Gulch. And then the Ritz-Carlton is being built in downtown Nashville. I mean, 5-star hotels going in.
Yep. Okay. So I mean, the development opportunity, the increase in tourism, the increase in residents. I mean, Will, how fast is Nashville growing? I mean, you guys spoke about other developments going on for residential, and it just seems like it's just booming like crazy.
Yeah, there's been multiple times in the last several years where, Nashville, especially when you're looking at metropolitan cities, has consistently been one of the 10 fastest growing cities in the country. So, and as you can see with the development that's coming in, that's not going to slow down anytime soon.
No, not at all. So, I mean, it would be safe to assume then that, again, these investments are, again, limited in nature. You really need the inside track if you're going to be investing and picking them up. The return on investment is there. I don't see any downsides to it with worrying about losing the ability to have an STR permit.
I think something that Rick said that is really key is that if you have an opportunity to be able to get in on the development side, to partner with a developer financially, and to really be able to get these, I would consider them to be more of wholesale prices rather than the retail prices. I mean, what you're looking at on the appreciation, just even by the time that they're built, by the time that they're finally constructed, what your return is on that. And then, what you're going to be able to rent these out for when these different projects are finished. The River North and the Yards projects are done. So there's a reason why we're rated number 4 in the entire U.S. and number 1, in the continental U.S. by an independent third party as far as short-term rentals go. And that's, they're comparing us against every other city in the U.S. So for developer dollars or and investor dollars, I mean, the numbers speak for themselves that this is the area to invest in.
Yeah. And the occupancy rate, I think that's another question that I would have is, what type of occupancy rates, are you going to look at? Is that, 100% occupancy through the entire year, or in order to generate, that $10,000 worth of cash flow, is that at a 60% occupancy rate? And you can see I pulled up kind of the averages that are being reported in this particular report.
Yeah, so I can speak to that because I've been actively managing my inventory, those 7 units for, 12 plus months now. There is a seasonal slow in really November, December, January, and it picks back up in February. I think this year it was hit a little harder than last year. So I don't think we have true data yet, just because, that new variant of the coronavirus hit pretty hard in December and January. And it seemed like everybody I knew was going through, if not their first, likely their second case of COVID. And so I think there will be a seasonal slowdown in those months. However, that occupancy rate may dip down to, 40 to 45% in those months. But really from March through October, November, I mean, I'm actively, booking out at like 65%. Weekends for sure. No doubt I'm 100% booked out every weekend. And then my group is, once we get some units onboarded and now that we have kind of the operation dialed in and really improved on the marketing and the guest experience, they're going to look at alternative ways to book these units out during the week, which is, corporate travel, traveling nurses, and some of those other avenues just to book out a little more during the week. But without a doubt, I'm 100% booked out every weekend from March to November. Right now in February, my rates are anywhere from 800 to 1,000. In really starting in April through October, I'll never book out at less than $1,000. During the week, I drop my prices to like $450 because again, it doesn't book out as much during the week, the weeknights, Sunday through, I guess it would be Wednesday. And so I drop my prices to, right around 500 during those nights to try and capture some of that week travel. But on the weekends, I'll always be over 1,000. Last year, in 2021, my highest booking was $1,350, and I was hitting that pretty regularly per night, per unit, Thursday, Friday, Saturday.
Got it. Okay. I mean, that sounds pretty amazing to me.
And they sleep 10. So, I mean, that sounds like it's a lot for a unit, but it also, sleeps 10 people. So if you break that down on a per person price, it's really not that bad. If you sleep 10 and it's $1,300, it's $130 a person.
Absolutely. It's not bad at all, especially compared to a hotel. So I get it. And then real quick, let's go back to those tax advantages or the benefits you're talking about.
I'm sure most people on this call or that are going to listen to the call are familiar with the Opportunity Fund and zones and that benefit. I'll recap it real quick just in case. Basically, it's a tax initiative. Obviously, we had the housing crash from 2008 till it came out, I think around 2015, 16 or whatever it was. They estimated there's like $3.4 trillion of unrealized capital gains because housing went back up and appreciated. And so this was an initiative to basically give or to incentivize investors that had those unrealized capital gains to sell their inventory, realize the capital gains, and put those dollars into areas that needed developed. Oddly enough, most of downtown Nashville is in an opportunity zone, and all of my inventory is in an opportunity zone. So there's really two parts to it. The first was, okay, if you sell your inventory, your capital gains, you have a capital gains exposure or liability, they'll defer that out to 2026, depending on when. It's a sliding scale as you get closer to 2026, but there would be a 15% discount on your exposure. The deferment alone is huge for most people that have capital gains because they're deferred out to 2026, but then you get a up to 15% discount off of your exposure. And that's really not even the best part of it. The best part is, okay, once you realize those capital gains, and you invest it into these underdeveloped areas, as long as you develop it and hold your asset for up to 10 years, then there's no capital gains exposure when you sell it, as long as you hold it 10 years.
Wow. I mean, look at it from the perspective, and I apologize for interrupting, but look at the perspective of an investor here who is rolling the proceeds from a 1031 exchange into one of these opportunities is a way that not only can they boost their cash flow like crazy, but also a way potentially for them to defer out a capital gain on an investment.
Defer it until 2026. And then if the asset that got the dollars that developed the asset in those underdeveloped areas, which are in my case, townhomes, as long as I hold this inventory of townhomes for 10 years from the date I acquired it, which is 3 years ago. So I only have 7 years left, and it's all structured in an opportunity fund. As long as I hold it for 10 years, if and when we sell, at say year 11, there's no capital gains exposure, and the basis is, pretty considerable given, the appreciation we spoke on earlier.
That is pretty amazing. Will, what do you have to say about that?
I think it's as big of a piece, and I think sometimes people don't talk about the tax piece. I think it's as big of a piece as the cash flow and the appreciation. It's not about how much you make, it's about how much you get to keep. So that tax shelter is tremendous. Like when you look at all three of those factors, it's hard to find a better investment as far as real estate goes. I would put it up against anything in the country.
It sounds too good to be true, guys. It sounds too good to be true.
There's a lot of pluses to it for sure. And I've been an active real estate investor since 2005, and I'm extremely bullish on it. That's, I've more or less moved to Nashville as a result. I share time between here and Scottsdale, but
yeah, it's not a bad place to live these days, is it?
No, not at all. Minus it rains here too much for me. I'm used to the desert where it doesn't rain and stuff.
Yeah. Well, hey, I'm in California, and we've only had, we haven't had any rain this year yet. We're already in February. We had 0 rain. So,
Wow.
yeah, we're going in a pretty bad drought. So I guess to wrap it up, or to put a pretty bow on it, how can someone take advantage of these opportunities?
So obviously I spoke on my inventory. I currently have 11 active units. 4 I'm still onboarding because I met the 1231. I did fall short on a few projects just because, we ran in on the construction side of things. Nashville is extremely busy. So, subs are spread pretty thin. You had supply chain issues. The city of Nashville is extremely busy with building and development. Inspections took longer to be had. So I do have 11 active units, and I have a project that's in that commercial zoning that I got a special exception on, which is a driver and a half away from River North, 17 units that's in the planning and permitting phase. I should have my permits and start construction probably within 60 days on 17 new units that will all be eligible for short-term rentals. All the heavy lifting is done as far as
area.
Yeah. And I'm pacing around. I have 4 units that sides to it, split by an alleyway, and I've been pacing around the living area. So I see my piece of dirt right here, and if I look over, I can see, where River North will be. I came into this, as I mentioned, 3 years ago, and I have probably, in terms of the people visit, I have 2 smaller, I don't know that they're necessarily smaller, but their commitments to what they committed to me here in Nashville is a smaller amount. And one in particular probably just bit off more than he could chew as far as his commitment. And the other one is an older gentleman that is not wanting to hold 10 years because he doesn't think he'll be around in 10 years, even though he will. But, he's well off. He enjoys his daily golf in Arizona, their LDS. And so they have a desire to get out of the investment here.
So we've got opportunities for not only purchasing retail, right, Will, for buying, individual units, $800,000 plus, from a small investor rolling in a 1031 exchange, to development opportunities where you're looking for partners to come in to invest in for larger amounts. Typically, if you're looking for someone to invest an amount into one of these development opportunities, well, what range of investment are you looking for? What's the minimum amount? And, give me an idea of kind of like a maximum amount.
Yeah, so the 17 unit, which is, in planning and permitting, total cost with land, soft costs, and projected construction costs, which I think will come down because I think it's anticipated construction costs to come down a little from, where it was at a high. And so, that project will have a total cost of about $9 million. Ideally, wouldn't want to put any debt. I have reached out to some institutional lenders that have given me term sheets, so debt is available, but I like to do things with equity partners versus putting debt on it, just because then, you're not being chased by a bank or time and stuff like that. And then I have 11 units. Ideally for me, I would like to find joint venture partners. I don't know that I would sell any of my units because they're so valuable, just retail to be done with it. I don't think that's my plan. I would like to find other investors that would be interested in coming in and participating in the whole at some level.
So again, kind of like would you mind throwing out a dollar amount for like a minimum level?
I don't know that I want 20 partners in so, in total, so say if we only focus on the STR stuff.
You didn't know you'd be put on the spot, did you, Rick?
I didn't.
And we're not. I mean, just kind of like a general idea, and obviously, any investors that are interested in doing that partnership, the details can be worked out. But just kind of giving an idea of someone who's looking at this as, hey, I've got an apartment house or a commercial building here in California, and I'm selling it. The capital gains are going to kill me. I've got, $5 million I can roll into something else. That development opportunity could be one of them. Two is, again, to where I have these other clients who are selling their homes that they've rented out for the past 5 or 10 years, and they want to roll it into something. So it could be anywhere from, again, $800,000 to, $1.5 million. So we have a couple different ranges of investors who will be interested in these opportunities?
Sure. So, just the STR inventory, which are the 11 active and then the 17 that are about to be under construction, those total capital need will be in the neighborhood of like 17, 18 million. I would say, anybody willing to come in at $1.5 million too, just to keep the number of participants down, probably is what would be preferred.
Okay, so opportunities of $1.5 million to $2 million to be a partner investor in the development. And of course, we know what the retail cost is. Awesome. This is great, guys. Thank you. Believe it or not, it's already been about an hour here talking through this development opportunity and the rental opportunity and the investment opportunity. You guys obviously are a wealth of information. I'm super excited to share this with my network of clients and investors here. Thank you guys very much for taking the time out of your day to connect and give us a little bit of insight into what's happening in Nashville, because it's pretty amazing.
Well, thank you too, Brad. Very well connected out there. And I think we could create some win-wins together for sure.
Awesome, guys.
Yeah, and that's the only way I like to do it is it needs to be a win-win for sure. So
absolutely. And again,
especially when in partnerships, because you want to make sure your partners are equally as happy. So
well, it sounds like there's enough opportunity abundance out there for someone who's interested in coming in and make it a smart investment that's definitely going to provide some great returns, some great tax benefits for them in the future.